All right, here we go. Welcome back to Stocks by the Numbers. And I wanted to personally wait until Inauguration Day to see exactly what would kind of quote unquote be the number one priorities of the Trump administration at the moment. And he did sign a bunch of executive orders, and I mentioned a bunch of things last night as I was watching it live. I mentioned a couple of plays, in my opinion, that I would consider taking, a couple of sectors or stocks that I would specifically stay away from now under the Trump administration potentially over the next 3 to 4 years. And I just wanted to make a quick video. I'm not going to try to spend too much time on each company, but we'll do like a minute or so on each stock and we'll just talk about them quickly. So he spoke about, of course, the missile Iron Dome over the country so that nothing can happen to us. In my opinion, I personally like General Dynamics, symbol GD listed here on the New York. The company makes vehicles, rockets, warheads. They're really involved in multiple facets across our military. So, in my opinion, do your due diligence, of course, on GD or even the whole sector if you prefer maybe like a Lockheed Martin or somebody to GD. But in my opinion, I think GD is going to benefit nicely. And we have the next potential drop. I know it pulled back here recently. It got up above 300 right after elections and then pulled all the way back to about the mid twos. So right now it was up today almost 2% here, 271.63 on the close. And in my opinion, this right here could potentially be the next key level that it drops down to, maybe like 249 and change. But in my opinion, I do like it. I think it looks good in the numbers. It remains pretty healthy, right? We have these consistent contracts from the government and the military coming in. Market cap right now a touch below 75 billion. I think I personally put the fair value, my personal quote unquote fair value of the business, I think is around like 59, 60 billion. So you can see we're only trading potentially about 1.25 times fair value. So this market cap in my eyes can easily get up to 90 to 100 billion. So that could be a nice quick maybe 20 to 30% growth you can see in the shorter term. Over the years in the longer term, I think it could grow even more. But they're consistently increasing their dividend, paying it out to shareholders right now, yielding a touch over 2%. They're trading 20 times earnings. And look at that beta as well. Beta, again, is the volatility of the stock in relation to the overall volatility of the market. This technically is about half as volatile as the major indices. Quickly on stock charts, we can see the stock has bounced essentially since the ball dropped, hit those bottoms, and then have been climbing on the up and up. Recently got, I think, another contract, like 188 million or whatever it was, ads everywhere. But you can see the stock ran right back up to the 50-day moving average of a touch below 274, hit 274.15, and then pulled back a little bit. So we could bounce around, and again, we could reject back to the 250, sub 250 range. But in my opinion, I think it should really slowly step its way back up to the 200-day. And my personal price target, again, even over the next 6 to 12 months, if you don't want to be married to it, I think this is good for at least, again, 20 to 30%. So I'd probably put 3.25, about $325 a share, I think, in my opinion, could hit new highs and rally up from there. Next company. We spoke about PDS a while back, Precision Drilling. Now, this is a company actually based out of Canada, I believe. Let's double check. Headquartered Calgary, Canada. So this company, obviously, Precision Drilling Corporation, right? Because I was speaking about drilling equipment, right? Because if we're gonna drill, baby, drill, I can appreciate the fact if people instantly, connect that to something like an Exxon Mobil, and they're like, okay, so now if it's all about oil, should I just buy Exxon Mobil and ride the wave? And while that could kind of, in theory, make sense, in my opinion, I would try to focus more on the actual drilling equipment companies. And this one I like personally. Again, PDS on the New York right now trading at about 65 and a third, relatively flat today. But in my opinion, even though it's based in Canada, we've also had talks recently from, I believe, Polivier, his name is. And I know he was speaking about how, Trump was saying, oh, Canada should just kind of come into the U.S. And whether that happens or not, I think it could benefit um, most Canadian oil drilling, oil exploratory, mineral mining companies. Something like LAC, I still personally think is going to work out well over the next 2 to 3 years once they actually begin mining. But PDS, in my opinion, I think it could work out well. And they were talking about doing more drilling and accessing more oil in Canada. Now, I know we're coming off the 1-for-20 reverse stock split back in the tail end of 2020, but technically has been on the up and up and relatively flat since then. And you can almost make the argument for a tightening of a symmetrical triangle potentially forming here. So the stock may remain quiet. And then once we hear news about a potential partnership with the US or something like that, you and I both know how a stock could react just off of just a quick statement from President Trump. So in my opinion, I do personally like PDS. I also would actually stay away from something like an ExxonMobil. And the reason why is because it's so closely tied to the price of oil per barrel, right? So while we could, of course, have run-ups, and we could run up to, back to $82, $88 per barrel, in my opinion, it's probably going to come way down. I think when memory serves correct, I think when Trump left office, it was like $32 a barrel or something like that. And immediately after Joe Biden won the presidency, all the money piled into ExxonMobil, and the stock ended up running from like $30, $40 a share up to like 120, 130, wherever the heck it went, right? And it was all because it followed the price of oil. So I know that they, of course, follow the value of oil, but in my opinion, I do like PDS. I think it could work out very nicely. We're looking UEC, Uranium Energy Corporation. You can see that obviously this has been on the up and up since 2020. We're talking about uranium and energy independence. So, in my opinion, something like this could be good. The earnings have been kind of decent. The market cap has been up, though, right? So now we're talking about over a $3 billion company. Beta 3 times as volatile as the stock. And again, the earnings technically have been mixed here. We're coming in with wider than expected losses over the last couple of quarters. But, this is the problem is, the uranium sector got pumped up as well. And I can appreciate the fact that a lot of volume came into this sector as a whole. But uranium, titanium mining, exploration, extraction, Wyoming, Texas, Saskatchewan, headquartered Corpus Christi, Texas. So just something like that, in my opinion, could still have value over the longer term. But again, at $3 billion, I mean, even if we draw out our support trend line kind of from the bottom here in the 2020s, you can see we recently dropped down there in September. And if we happen to pull back, you can see maybe about 5.5 or maybe just slightly sub 6. So one to keep an eye on, in my opinion. We're talking about uranium in the Discord. And there was also Use Energy Fuel Incorporated, right? I had the trend lines drawn out on something like this. And this stock, $5.58, up 37 cents, about 7% here on the day. This one has a market cap of about $1 billion and still operating at a loss, but we can see we're bringing in a couple of million every quarter. Starting to grow out now, potentially in 24 and 2025. We have 7 analysts covering the situation, 6 giving it a strong buy, 1 giving it a hold. Highest price target, almost $13 a share. Stock right now, $5.58. But we can see, look at the jump up expected in revenue now over the next couple of quarters. I mean, of course, Q1 looks like their quietest quarter, but, before and after that, we're in the high 30s now, 40 plus million. And before this, the highest was 25 million going back roughly the last 7 quarters. So you can see that we had the lull here, and now we're coming out of 2020, and look at the growth that we're expecting over the years. 63 million, 167 million, doubling that to 330 million by 2026. So if this goes according to plan, this company, in my opinion, could break out. We could be talking about a $20, $30 stock one day. Shout out to, I think it was Velser or whatever his name is in the Discord. Shout out to you. I think that was the person who kept mentioning it. If it was someone else, I'm sorry. Trump signs executive order pulling USA out of the World Health Organization. I would personally stay away from almost all pharmaceutical stocks. Something like, here I put out a note, look, puts mentioned in the Discord. Lily recently dropped down, but in my opinion, something like Lily, I think I did a video even it was like back here at like 300 and change, and I said in my opinion, looks overvalued. Obviously, that didn't go according to plan. Stock ran up to 900 and change or wherever it went. But overall, I still stick to my analysis. I still say, overall, in my opinion, Lily is not only overvalued, but also with the RFK coming in now, I think that certain sectors like foods, beverages, and of course pharmaceutical companies are potentially exposed now to this administration. So in my opinion, I personally wouldn't buy Eli Lilly. I wouldn't buy Merck, right? Merck Company, MRK. And let me see, did they drop at the election? Yeah, then they bounce right back and drop back down. I would still say, in my opinion, it would personally make me nervous. And again, you could wake up any day and all of a sudden that either your specific pharma stock is being targeted or the entire sector is being targeted as a whole, especially any company, in my opinion, that was connected to those lockdowns and were, pumping out those injections. What was it, like your Modernas and whatnot? In my opinion, I wouldn't touch any of those. We spoke about PDS, World Health, Schlumberger, SLB, listed here on New York. We were talking about it in the Discord. We can see, obviously, over the last week or so, the company just reported earnings. Nice beat on the top and bottom lines here. Stock's been up, back up to the mid-40s now, almost touching 44.5 today. We were looking at this key level. I know someone mentioned they try to buy it in the 20s. In my opinion, if it does really drop down, maybe you can see this level of about 30.5. But overall, I believe that this is actually a decently valued stock. And also, because we're talking about a domestic energy company, again, headquartered out of Houston, Texas, around since 1926, I think, in my opinion, this could be a good, nice growth area over the next couple of years for Schlumberger. But again, if you tell me, oh, I like this other company, a little bit better, of course, you're entitled to your own opinion. Again, I'm just throwing out a couple of ideas and a couple of I know we're being kind of specific, but of course I'm speaking broadly and generally, but I'm just trying to pinpoint a couple of specific situations that, in my opinion, could really benefit over the next couple of years. LAC, of course, Lithium Americas. Again, we had the spin-off. LAC is now the domestic here in the States. LAAC is South America. But we can see that now we've kind of been bouncing off this potential support trend line, kind of like that. And again, I want you to understand, the stock took a big hit today, down 8 1/3%, down to $3.20 a share. But again, in my opinion, they're still building up their facility and whatnot, and they haven't started mining yet. So when you're talking about something like LAC, I just want you to understand that. This is more of a longer-term play, and I believe they said that everything was going to be completed and they were going to start mining. I'm pretty sure they said 2027. But remember, we know how these stocks move based off of news updates, right? So as we potentially get an update, maybe inside of the next 2 to 3 months, saying that, oh, it's moving along swimmingly, right? Or maybe we might even be a little bit ahead of schedule, right? If we get news like that, you and I both know the stock's going to gain momentum, start trending, probably pop back up to like 5 a share. So of course, you could see big pops and big drops based on little news updates. But again, overall, that is a longer term play. But technically slated again to be the largest lithium producer in North America, LAC. So that's why I personally like it. Next thing I spoke about was, he mentioned opening up Alaska Drilling and Alaska Energy. And if we look, there was a company, Hillcorp, which is technically privately held in Alaska, but supposedly it's like the biggest player in Alaska, according to what I have read. If you found or have read different information, or you think there is potentially a different play, then obviously let us know in the comments section. But I'm only mentioning this just for a little diversification, because you can see that if Hillcorp is going to be one of the main players, again, even though it's privately held, we have corporate bonds that we could take advantage of, right? And you can see some of these bonds going out 2028. You have bonds going out, look, 2033, and the payouts aren't that bad. 6.25, 8 3/8. So, in my opinion, something to consider if you're looking for a little diversification there. Hill Corp, again, corporate bonds. I can double check, but I'm 99% sure corporate bonds, that income's taxed at the OI level, which is the ordinary income level, which would be your income tax bracket, ordinary income tax bracket. I also spoke about Geo. Geo, again, we're talking about prisons, right? And boom, we're on the up and up. Now, again, I did a update recently, and I said we spoke about it here at like 10 and change, 11 and change. I know it's a REIT technically, but the stock dropped down to sub 7, and then you can see it ran right back up and even higher than where it was, and then has been breaking out as we've gotten closer and closer to elections. And then, of course, you can see the big pop coming out of election day, and the stock today hitting newer 52-week highs yet again of almost 36.5. So, in my opinion, I think GEO on the New York, and also CXW, Core Civic, I think these prison stocks are going to remain strong, and I think that we're going to restore law and order, which was my original theory and prediction, which is why I like them over time. And I still feel personally that they're both going to grow nicely over the next couple of years. Also, something potentially restoring law and order is something else that I did an update on. Again, I spoke about this stock, Byrna, BYRN, which sells less than lethal kind of firearms and self-defense. And they were receiving a lot of orders down in like South America. We spoke about Malay and Argentina, about how he was restoring law and order. And now, again, I'm seeing headlines coming out of Argentina, right? Like the first time they had a surplus in how many years. It's like they finally curbed their inflation and they're starting to bring it down. So, say whatever you want, but Malay's getting the job done. And we spoke about Burn again. I spoke about it here in the high 11s, it looks like, back in March of 24. I said I liked it. You can see we continued up, we channeled down, and then we've just been breaking up and up and out. The company essentially consistently comes out and says that orders are being filled and revenue is being generated just ahead of analyst expectations. And we recently got up above that 20 million mark over the last couple of quarters. But you can see, just look how healthy that revenue has been. Again, even with the EPS misses, the company's still coming in above analyst expectations on the revenue. So now we're pumping up estimates to 28 million. And of course, we just went on a massive run, stock up almost 200% from when yours truly said he liked it. But market cap still sitting here at sub 700 million. We do have a high PE, but in theory, again, in my opinion, this is one that should hopefully continue to receive orders, continue to remain popular on certain seller sites like Amazon, and hopefully they'll continue growing over the years. And you can see we're up to now that $40-50 million range. And they also spoke about opening kind of brick and mortar locations to, in my opinion, I'm assuming, kind of showcase how a lot of this equipment works to make people maybe a little bit more comfortable in making that purchase. And that should technically, in theory, lead to more sales. So Burn, BYRN, again, another one that I like that has already been doing very well. LEU as well, LEU, Centrus Energy. This is one that we spoke about a while back. We were speaking about this long-term symmetrical triangle and the potential popping out. The stock was over here at like 38, 39. We did the video. As you see, we completely broke up to above 100, kind of channeled down. And now, of course, today it has a massive spike of almost 14%. Why? Because we are moving back towards our energy independence and increasing our own domestic energy efficiency. So something like LEU, in my opinion, I know they went through a rough patch and it recently popped up and out, but I believe, we're talking sub 1.5 billion market cap with a PE of 15. Earnings, in my opinion, should remain more stable and get back on track. Also, revenue definitely has the potential to consistently keep increasing and keep the company profitable over the long run. You can see that Revenue has been on the up and up over the last couple of years, over 300 million now for 2023, with a 26+% net margin percentage. So, in my opinion, something like LEU, I do still think there's room to grow. And if we kind of reclaim where we came from, you can see that there's potential for the stock to run back up to 100 plus, 150, 170. So I know they went through a rough patch, but excuse me, this could be the turning point. So LEU, again, this is also low enriched uranium, hence the symbol LEU. So shout out to Centrus Energy. I also mentioned, of course, Fubo, I do still personally like. Rolls-Royce, of course, I do still personally like. And I have a feeling that there could potentially be more deals struck between Rolls-Royce and the United States, but of course, other companies as well. Again, I mentioned that, they take it out of the radar. They take the spotlight off of it. They have it flying underneath the radar. And then when you're not paying attention, that's when the revenue starts coming in. They start signing contracts. Everything's getting better and better. And then when it's up at $5 a share, that's when they talk about it. That helps pump it up now to $7 and change. You understand? So I said that. Again, we looked at this stock back at $1.20 at the beginning of 2023. So you are up massively here in Rolls-Royce. But again, believe it or not, in my opinion, I think there's more room to go. I think it gets back to double digits. And they also said that cash flow is now moving in the right direction. And they're going to reinstate the dividend back to shareholders. I like Verizon in my eyes, VZ. I know people are talking about the debt. Very understandable. In my opinion, I do think that the debt that these companies will now start to take on over the next couple of years are going to have much more favorable rates on them. So I do think that any companies that are keeping their heads above water or still showing growth, even though they have a decent amount of debt on their balance sheet, I actually think they may perform better over the next 3 or 4 years than they did over the last 2, 3, 4 years. So something like VZ in my eyes could be a very, very nice grower. When they beat it up and brought it down to the low 30s here, I said, in my opinion, I'd be all over it. That was the tail end of 23. And of course, stock runs back up to 45, right? So if you stepped in at 30, 31, you were collecting big dividends along the way and your principal is up 50%, right? So something like VZ, in my eyes, I do think it's a decent play. And we have a dividend yielding roughly 7%. And also I like Verizon because I believe the military uses Verizon as well. So again, while they might run into a couple of rough patches, you could potentially make the argument that something like VZ, in theory, really shouldn't go anywhere. Hold on, I need a sip. Okay, we're still moving. LPX, Louisiana Pacific. Again, this is a company, shout out to your boy. I started the channel. This was one of the first stocks I looked at. Stock was like 50, 60. I said, in my opinion, this is a $150 stock. If I was a big player, if I had a big chunk of change, I would personally consider investing into LPX. Of course, about 2 weeks later, we got news that Warren Buffett himself invested into LPX. And of course, you can see the stock is on the up and up, hitting highs of almost $123. This is a lumber company here domestically in the States. And what did Trump say? I know he kind of had the back and forth because they were specifically asking him about Canada. But what did he say? He kind of said straight up, listen, we kind of don't really need their oil. We don't really need their lumber, right? He specifically mentioned lumber. So that's why I also mentioned that under Trump in the coming administration, I mentioned this months ago, I said, in my opinion, I would absolutely consider investing into domestic material and mineral stocks. So again, longer term, something like LAC. Here in the immediate short term, you could still see growth in something like LPX. U.S. Steel, I still say there's value there. The company has been beating earnings consistently since getting into that bidding war. And again, stock was originally brought to you on this channel. It was like, I don't know, back here at like 20 a share or wherever it was. But as you can see, stock ran up to 50 plus. And in my opinion, if that's what they were willing to pay, then in theory, that's what the stock is worth. So excuse me. I still believe there's value there. And I actually think this could get to high 50s, potentially 60, even from this level. And even recently, when they beat it up and brought it down to, 30 and change, not even 2.5 weeks ago, I said, in my opinion, I would buy that dip. There's still value there. And the stock immediately ran back up to almost 38. So that's why something like this, as I mentioned when I first looked at it, even if it goes down after you buy, this is something that I would personally accumulate shares of and build a position in because there's value there. So whether we reinvest into American infrastructure and start using more domestic steel, X will continue to climb. And you can see, look at these numbers here. Look, beat, slight miss with a beat on the EPS, beat, slight miss with a beat on the EPS, beat. That's what I mean. So it's been on the up and up. So that's why we've had what? 1, 2, 3, 4 quarters, mostly beats, since we got into the bidding war and received the $55 bid from Nippon Steel out of Japan. So if it was worth 50, 55 here, and then we have 4 more beats with the potential reinvestment back here domestically into the States, I have to put value at 60, 70, 80 plus dollars a share potentially. In my opinion, I truly believe that's what the value in US Steel is. Maybe even more, honestly. Maybe even more. But I also mentioned SCCO, Southern Copper. Again, this was also one brought to you on this channel. We looked at it down here in the 40s. And I said, in my opinion, again, I'd be all over it. Hyperinflation, domestic metals. Again, we're talking about copper. They pay you a dividend to own it. You can see $78 billion market cap dividend currently yielding about 2.4%. And obviously the stock has been on the up and up. We went from the mid 40s to almost $130 a share, as you see, 128 and a quarter basically. So phenomenal win. Great call out again from your boy. But in my opinion, moving forward, I actually still think something like SCCO could remain pretty profitable and remain a good grower moving forward, even if the value of copper comes down. I mentioned Caterpillar. Caterpillar should be phenomenal. Now, I believe, yeah, see, you can see, look, 2016, we roll into 2016, and then look, you can see right the gap up right as Trump won the presidency. Stock went from mid 80s up to almost 100, flattened out for a couple of months, and then look at that B line almost straight up to 170 plus. Consolidated for about a year and a half, 2 years. As it was starting to break out, that's where we had the lockdowns, and then look at the way it bounced back. And even here, I believe, the end of 2022, I think I may have mentioned in the Discord that you might want to consider stepping in on CAT shares. And then we came back when the stock was like here at like 328 or something, and we were looking at the 100% move just over a handful of months. So something like Caterpillar, in my opinion, construction company, again, they have all the landscaping equipment and whatnot as well. So that's why, in my opinion, something like Caterpillar should technically remain a nice grower. But I know it's kind of on the up and up here, almost 400 a share, 190 billion market cap, 1.5% dividend yield, PE less than 20. But yeah, look at that growth. So that's why, if they're on the up and up, and we're going to start taking care of our own country, that's why I'm saying, in my opinion, something like Caterpillar could benefit nicely. American finance, I personally like Goldman Sachs, GS, and so did the market, obviously, today. Stock hitting new highs, but I know all of these banks are reporting kind of record numbers from the investment side of their institutions. So they're probably mostly going to remain strong, but I personally like Goldman Sachs, GS, and I like JP Morgan, JPM, listed here on the New York. I think both of those are your go-tos. I believe they're like the 2 largest institutions. And, I mean, we could make the argument too big to fail, but until or unless we get updates about them potentially like breaking up the banks, like people were saying, until you get news like that, then in my opinion, I believe that GS, Goldman Sachs, and JP Morgan should remain nice. Yeah, this stock randomly popped back into my head Global Star GSAT satellite communications. The stock was, yeah, really getting beaten up. In my eyes, I do like it kind of near the low $1 range, and I know it had a little pop today, up to almost 2. So maybe something like this moving forward if you can get it on sale. Market cap is pretty high though at 3.7 billion. Company brought in about 200 million in change for 2023, but is technically on the up and up. You can see now 60, 70 plus million the last couple of quarters. So something like this could maybe be something for you to consider, a little bit more of a spec play. But of course, try to get it at a decent value. I like my domestic backup tech players, which I've been saying for months. I personally like AMD, Advanced Micro Devices. This is the company supposedly on the heels of NVIDIA. I know people are saying they're not where NVIDIA is yet. I totally understand. We spoke about the stock, in the high 120s. It ended up dropping and hitting new lows here, 114. But in my opinion, again, it is on the up and up. And just like speaking about a lot of other of these tech companies that are going to benefit from the massive surge in AI demand and growth, that's why I feel, in my opinion, you want the backup players, I think. So I personally like AMD. I like IBM, International Business Machines. And, of course, SMCI. We love our SMCI supermicro computer. Probably going to make a separate video because I'm sure you all have heard the news that Hindenburg Research apparently went after SMCI, and then what are we hearing? Supposedly we're launching an investigation into Hindenburg Research with them supposedly colluding with hedge funds based on their research reports. And that's literally one of the theories that I floated when I first heard the news and we first spoke about that short report. I said, in my opinion, I wouldn't be surprised if they have friends somewhere else and they came out with the report to bring it down so that someone else they know could step in and scoop it up, and then everything's going to get pushed under the rug. It's not going to be a big deal. And then if sorry, too much coffee. And then if SMCI storms back after it was hopefully proven of not much or no wrongdoing, then of course they're going to look like heroes. And they're going to potentially get, a couple of bucks behind the curtain for putting out their report. And it's funny because it seems like something that you wouldn't want to buy into. And now you can see several months later, after everyone was kind of calling SMCI a fraud stock that they wouldn't touch, now all of a sudden, they've been holding steady. We had, again, Susquehanna announced they took a 5% stake in the stock while it was beaten up down here. And now supposedly the company that put out the short seller report is now under investigation for colluding with hedge funds based on their reports. So, in my opinion, that should technically wash that drop in value from that catalyst. Meaning that this stock, realistically, should be above $50 plus. And honestly, even if it happened instantly today, I personally wouldn't be shocked. So, in my eyes, that's where it should be, but my target on SMCI still stands at $200+ a share. I know some people think I'm crazy, but hey, that's my opinion. Also Intel. I know people were speculating about them potentially selling assets, but overall, in my opinion, look, people floating, could Elon Musk buy Intel? And I know we were talking about, who was the other company that approached them? Qualcomm, right? So, again, in my eyes, even though they're going through a rough patch and they lost a lot of market share to other competitors like AMD, in my opinion, I personally still think there's value there. And again, this is a company goes back to, I think, like the 50s or the 60s. It's a brand name American stock, brand name American tech, and whether they're behind the curve or they're incurring more losses than they should be, in my opinion, it doesn't matter because even in 2016, right after Trump won the presidency, I believe it was Intel who announced, I think like 1.2 billion or 2.2 billion, they were going to reinvest here domestically and build a new plant, I think in the Midwest or something like that. Talking myself out of oxygen here. But Yeah, you get the gist of what I'm saying. So, in my opinion, it could potentially pop back up here to the high 20s, potentially even 30, get back in this wedge that we were talking about. Um, on any news, of course, of a government investment into the company as well. But we'll cross that bridge when we get to it. Big tech, I personally, even though it looks good in the numbers, I can't say that I like Meta because Zuckerberg, in my eyes, was on his way to jail, and now over the last couple of months, he's showing up to UFC events and meeting with Trump in Mar-a-Lago. So, in my eyes, he's trying to stay out of jail. I mean, they might potentially, take the crosshair off of him, but in my opinion, you did what you did, and that's why I personally feel that some negative catalyst could potentially come out against something like Meta before it comes out against something like Google, Class A shares GOOGL, or of course Amazon, which I said I always liked. I said I liked it for years, actually. And it was maybe, I actually mentioned Google and Amazon are potentially the quote unquote, oh, excuse me, they are potentially the most quote unquote fair valued businesses when it comes to big tech. And of course, at the inauguration, you had the CEO of Google and you had Jeff Bezos over there along with Zuckerberg. So that's why, again, Zuckerberg, I think, in my eyes, trying to keep himself out of jail. Bezos, Google, I think they were there to talk business and talk about reinvestment into America. I mentioned the pharmaceuticals. Yep, Johnson and Johnson. I would stay away from these domestic, like produce stocks. I like Vital Farms, technically, in my opinion, VITL, Vital Farms on the NASDAQ. Sub 2 billion. And look at that growth over the years. And I believe that Trump is going to take care of our farmers. Everything here, domestic, agricultural. RFK is going to make us healthy again. And Sprouts, of course, 5.5% pop today, up to $147 a share. Sprouts Farmers, SFM, has been on a tear really over the years, but in general, in my opinion, I think it'll remain a healthy grower. EPS revenue, just look at that, consistently climbing year over year, up to almost $7 billion. And the last couple of quarters as well on the up and up to almost $2 billion in revenue for the quarter. Look at this stock. Right? Overvalued out of the gate, drops down, doesn't do much for years, all of a sudden bottoms out, revenue adjusted now is outpacing the value of the business, so now we go on the up and up and up, and everyone wishes that they bought it. So something like SFM and Vital, VITL. I would stay away personally from stocks that are overexposed on tariffs, something like Whirlpool, which I believe still assembles their products in Mexico. Or recently, what was it, a couple of years ago, right? Announced that they would move the plant down to Mexico, right? Anything like that, in my opinion, I wouldn't touch. So, in my eyes, I wouldn't buy Whirlpool. I wouldn't buy something like Mondelez, right? Even Trump said, "I'll never eat Oreos again." That's what I'm saying. In my opinion, I would stay away from these companies. Also, I mentioned insurance companies as well, because I think insurance premiums that have gone through the roof are now going to come back down to earth, which of course means lower premiums and less profit for insurance companies. So something like MetLife, I would personally stay away from as well. And I'm also speculating that interest is going to be a topic of discussion. Interest that is burdening the American people and keeping them inevitably in a cycle of debt. So, in my opinion, credit card stocks, which we spoke about, doing very well. I mentioned that I liked over the years, I like Visa and I like American Express. Both have been doing very well. But now, in my opinion, I actually think they're going to potentially go after them and not necessarily kind of like shut down the operation. I think they're going to really start hammering away. Oh, excuse me. I think they're really going to start hammering away at the interest that these companies are charging. So, in my opinion, Visa, American Express, MasterCard, I personally, if I was in them, I would consider taking the money and running before news comes out. Now, I understand you can see something like AXP, earnings coming out. Again, this is going to be for the previous months before Trump took office. So they technically should report another strong quarter. But again, in my opinion, that technically it's a theory, but in my eyes, it's one to keep in mind. Because if you do hear that announcement, they ran so much, the credit card stock. So if you do hear that announcement, you might see a big drop real quick. Something like MBOT, in my opinion, I like. We spoke about this. Microbot Medical, obviously, stock broke out. We have some potential good news coming on the horizon this year. I said 2025 could be a nice, good breakout year for MBOT, and that's basically exactly as it happened. And stock, I feel, in my opinion, is on the up and up. And again, we're talking about a $50 million market cap. This is cardiovascular robotic surgery that the company is going to get into. People mentioned in the Discord they feel that something like Intuitive Surgical, ISRG, cannot duplicate this process without potentially infringing on MBOT's patents. So we have something in the making here that could potentially be huge, in my opinion, and I do still like it. And this is, again, this is robotic surgery. This is not pharmaceutical, right? So that's why something like this is not, in my eyes, in the crosshair of somebody like an RFK. SoundHound, of course, I think, in my opinion, even after this big run-up, of course, we got the news, we're investing a couple of $100 billion in AI. So all of these tech stocks had big pops today, all these AI stocks. I know the quantum computing stocks ran, but we spoke about them recently, right? We're still years away from quantum computing, but we gave them the value now instantly. So in my eyes, I would honestly wait for them to come back down to earth and then potentially start building a position, accumulating shares. But SoundHound, SOUN, huge winner for us on this channel. I was looking at that stock every 3 to 4 weeks. So we obviously, excuse me, we obviously been looking at it for quite some time down here in the low ones. I did updates in the 4s and the 5s, said I still liked it. The stock broke up to just about $25. And today, back up to 16.5, 21% move today. But SOUN, voice AI company that, in my opinion, should still remain solid. Cybersecurity stocks, Sentinel-1. Sentinel-1, in my opinion, look at this again. I put the updates here. Yeah, I drew out these trend lines. This wasn't here, if you remember. You can go back to this day. I think it was December 9th. And I predicted and drew out these trend lines, and you can see just how pretty darn well I made these calls. But we immediately dropped down to the first trend line, dropped down to the second trend line. We're potentially starting to drop down. But here, in my opinion, I think I said, I even have like a little alert set up here. I think it's at 21. Yeah, stock crossing 21. In my opinion, that would be ideal. Kind of 21, sub 21 down here, if you can. But again, we know that we are potentially turning. Stocks have a mind of their own. We just technically got back above the 20-day. So we have to see if it wants to, break back up or reject and come back down. But overall, in my opinion, Sentinel-1 technically growing nicely in the numbers over the years. And, of course, as we advance into this tech age, we're going to need our cybersecurity companies. And, again, could be viewed a little overvalued here in the high 22s. But overall, in my opinion, I do like it, and I do see the potential for it over the next couple of years. We spoke about Schlumberger. Last two things. POW, Ammo Inc. Again, ammunition company, POWW on the NASDAQ. Spoke about potential ascending triangle just days ago, and saying that, in my opinion, we could see a pop back up to, 160, back to these trend lines here, and that is exactly what happened. Stock popped today, got up to 172, closed at 168, 12% run. And in my opinion, I actually still think there's value there. And I like POW over the longer term. And also SWIBI. Ticker symbol Smith & Wesson brands, symbol SWBI. This is a company established in like the 1850s, one of the oldest companies we have. This is American brand name stock, market cap sub 500 million, PE 13. They pay you a dividend yielding 5% right now. And again, it's cyclical. It's a firearm company, and I understand it's cyclical. But I tweeted about this and recently did a video, and I said, in my opinion, I put value at like $18 a share. But even through all of these trend lines and the pops and drops, you see you can easily maybe run this back up to 14 and change, $16. But over time, I personally like this one over the next couple of years. So POW and SWIBI, SWBI, along with maybe something like General Dynamics, and you can play kind of like the firearm, ammunition, defense sector, kind of overall as a whole. But that's oh wait. Also, companies that will kind of, no matter what, remain necessary, right? So we spoke about something like Waste Management. WM is a garbage company, right? Whether you like Trump or not, we're still going to produce garbage. Something like Waste Management, in my opinion, should remain stable. I know it's up since we last looked at it, 85 billion market cap. They pay a dividend as well, 1.4%, PE of around 30. EPS has been on the up and up. Revenue slowly stepping up here, 5.6 billion as of last quarter. Slowly climbing over the years, got over 20 billion for 2023, trading about 4x revenue. And again, a lot of these companies, if you see, even if they're overvalued, again, a stock like this is not going to get absolutely decimated like an overzealous, strong, fast grower, meaning something like a Palantir, I still say. I know they're getting a lot of good news and they keep beating earnings, but if these markets correct or have a big drop, if this stock drops down 50% from these levels, in my eyes, that makes perfect sense. Like, you can't be mad. So that's why there are certain stocks that I'm picking specifically just in case that there is a pullback or a market sell-off as well. But WM, necessary business, garbage. Again, went on a run, so could be viewed as a little high, but pays you a dividend, should remain stable. Also, something like 3M. And I love it because, again, I did a video, probably nobody watched it. I did a video probably like back here somewhere because I remember the stock was in like the 80s or something. And I said, in my opinion, brand name, American company. They make a lot of products that people use every day, whatever, Scotch tape and all this stuff. So I said, in my opinion, they pay you a dividend. I said, in my opinion, I would consider taking a shot here in the 80s and just tucking away long term. I said, you should probably be fine. And obviously, as you see now, it is slow and steady, but you're up almost 100% on your principal investment. And of course, you've been collecting a dividend the whole time. But even at 80 billion, we could make the argument that it could keep popping. Dividend yielding about 2%, trading 17.5 times earnings. EPS, nice solid beats. And of course, we know profitability dropped off, but just remaining stable in that 30 billion range. Last couple of quarters coming in light, but again, stock is on the up and up. I believe it's going to be all of this reinvestment, money flowing back into these domestically, fundamentally stable, or even fundamentally undervalued stocks. I think those are the ones that are going to work out well. Again, I said that in my opinion, the days of companies like mentioning AI in an earnings call after they miss earnings, that's not going to help anymore. I personally believe we're now going to be a fundamentally sound market. And the companies that come out with mixed or bad earnings are going to drop like they used to. I also mentioned something like Corning, GLW, which obviously, as you see, has been on the up and up. Stock today hits new highs of 52.03, closed up almost 3.5% at about 51.5. 44 billion market cap. They pay you a dividend to own it, 2.25%. So we're on the up and up. Could potentially make the argument for overvalued, but again, this is a domestic American brand name company, which is why, in my opinion, the money's still flowing into it. Also, one last thing, something like Dow Chemical, DOW. I know people have the crosshair on them, talking about chemtrails and whatnot. And now, again, with somebody like RFK coming in, make America healthy again, that's why I'm saying, personally, Dow Chemical, I would stay away from. Any of these pharmaceutical companies, again, that were connected to what happened a couple of years ago. I would stay away from snack food companies, companies like Hershey, even something like Campbell's, again, with the preservatives they put in the condensed soup. I really don't know if I would feel comfortable taking a position. A lot of beverage stocks, right? That's what I mean. If he's going to come in and he's going to start saying, okay, we need to ban caramel color, we need to ban high fructose corn syrup, we need to ban, all the food dyes and whatnot. That's why I'm saying, in my opinion, all the snack food companies, these candy companies, these fruity beverage stocks. All right, that's annoying me. But these fruity beverage stocks, I would personally stay away from all of them. And that's pretty much it. Hopefully I didn't talk too long, but overall, I'm pretty sure you kind of understand the gist of what I'm bringing to the table. I tried to keep it diversified. I personally think these are going to be a lot of good plays. But again, you guys know you have carte blanche in the comment section. So if you have something similar in a sector or an area that I mentioned, if you like a different symbol, a different company better, let us know down in the comment section. We can check those out as well. And also, if you think that there are a handful of companies or sectors that you should stay away from as well, let everyone know your thoughts down in the comment section. But that is it, and I will end it there. But again, this is why I wanted to wait. And everyone immediately started making Trump stocks to buy, 10 stocks I'd buy under Trump, the day of election day. And in my opinion, they were very premature. Whether they're still up or not, it's kind of irrelevant. Because you have to wait for the actual policies to come in place, and you have to kind of understand what could potentially be going on behind the curtains so that you can kind of start to see the writing on the wall 1, 2, 4 years from now. So that's why I took my time. I waited for Inauguration Day. I saw what specific executive orders he was signing on day one. And in my opinion, I think I just came up with a decent, diversified list to potentially help you all out over the next couple of years. And of course, as we see anything new, we'll add. If we see anything bad, we'll subtract, right? But I'll end it there. So once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel, right? That's our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.